All right, we need to talk about this massive Hollywood deal that's brewing. On the surface, it's all about who gets to own your favorite shows and movies. But what if I told you this whole thing might actually be a huge, flashing warning sign for the entire stock market? So right now, there's a $100 billion battle raging for control of Warner Bros. And for us, watching at home, this could be amazing news. Imagine a treasure trove of content all in one place under one subscription. The big question, of course, is whose subscription will it be?
But here's where it gets interesting and a little bit scary. There's a theory that says this kind of mega deal-making has a dark side, that it's not a sign of a healthy market, but actually a classic signal that the good times are about to come to a crashing halt. Okay, so let's get into the specifics. Who are the big players in this fight, and just how crazy are the numbers we're talking about here? Well, you've got two of the biggest names in streaming placing absolutely massive bets. Netflix is in the ring with an $83 billion offer. But get this, a rival bid from Paramount Skydance is currently blowing that away with a staggering $108 billion.
Now, this is where you really need to pay attention, because this isn't the first time we've seen a giant deal like this for this exact company. And history shows that when this happens, bad things tend to follow for the market. Some people are even calling it the Warner curse.
Let's just walk through the timeline, shall we? Back in 1990, Time and Warner merged, and what happened? The decade's big stock market party came to an end. Then, fast forward to 2000, AOL buys Time Warner for an unbelievable $162 billion. That deal literally became the symbol for the peak of the dot-com bubble, right before it popped. And that brings us to today. See the pattern? So the big question is this just some spooky coincidence? A weird fluke of history? Or are there other signs out there right now that the market is getting way too bubbly, way too frothy, as the experts say? Well, when you start looking around, it seems like the clues are kind of everywhere. The analysis we're looking at points to a bunch of red flags, starting with some of the biggest potential stock market debuts, maybe ever. First on the list, OpenAI. The company that gave us ChatGPT. They're reportedly thinking about going public at a valuation of $1 trillion. Let that sink in. That's a jaw-dropping number, bigger than the economies of most countries on Earth. And OpenAI's main rival, Anthropic? They're no slouch either. Their potential IPO valuation is being pegged at a cool $300 billion. I mean, these are just mind-boggling figures for companies that are still basically in their explosive growth phase. And it's not just the AI space. Look at Elon Musk's SpaceX. It's not even public yet, and it's already raising money from investors at an incredible $800 billion valuation. These aren't just big numbers, they show a market that is willing to bet absolutely huge on the future. Okay, so beyond these wild IPO valuations, there's another major warning sign in how the current market is behaving. You see, the recent stock market gains have been super concentrated. A tiny handful of companies are basically doing all the heavy lifting for everyone else. And this chart just lays it out perfectly. Since this bull market really kicked off in late 2022, just 7 huge tech stocks, you've probably heard of them as the Magnificent Seven, they're responsible for half, a full 50% of the entire market's gains. That is some serious concentration. It's like a pyramid balancing on its pointy tip. It might look impressive, but it really doesn't take much to knock the whole thing over. So that gets us to the why, right? What's the psychology going on here? Why do these massive, risky deals seem to happen right at the very top of a market cycle? Well, it really just boils down to human psychology. After a long period where stocks only go up, everybody starts to feel like a genius. You get this widespread optimism, this feeling of invincibility. And that makes huge, complicated deals seem not just possible, but easy. Plus, when your company's stock price is sky high, it feels like you're playing with house money. You can use that expensive stock as a kind of currency to go out and buy your rivals. But here's the cold, hard reality check. Pulling off these mega mergers successfully is incredibly difficult. This analogy just nails it. It's like trying to glue 2 massive container ships together while they're in the middle of the ocean and then trying to steer them. It sounds pretty much impossible because, well, it often is. So if we take the Warner curse seriously and we look at all these other signs of a super frothy market, what should we be watching for next? What are the tripwires? There are a few key things to keep an eye on. First, will government regulators even approve a media merger this big? Second, will those trillion-dollar AI companies actually go public, or will they get cold feet?
And maybe most importantly, can those 7 tech stocks keep carrying the entire market on their backs? The answers to those questions could decide everything.
And that brings us to the final, really sobering question. When you lay all this evidence out, the history, the crazy valuations, the psychology of it all, what's the big takeaway? Look, nothing in the markets is ever 100% guaranteed. But the conclusion here is pretty clear. This kind of deal-making frenzy is a textbook sign that a bull market is on its last legs. And if history is any guide at all, a mega bid like the one for Warner Bros. Means a correction isn't just a possibility, it's probably just around the corner.